Financial institutions now run on digital infrastructure that was never designed for today's cyber threats, cloud dependence, and always-on services. In this module, we'll explore why the EU created DORA and how it replaces fragmented ICT rules with a single, harmonized resilience framework for the entire financial sector. In the past, financial institutions worried mainly about capital and credit. Today, their real lifeblood is software, data flows, and interconnected platforms. That shift massively expands the attack surface. Operational resilience is no longer optional technology hygiene. It's now a core condition for financial stability. Before DORA, ICT risk rules in Europe were a patchwork. Each country had its own approach, sometimes even conflicting, so cross-border groups faced different expectations everywhere. EU authorities issued guidance, but much of it was non-binding, so enforcement depended on local supervisors. Many firms leaned on voluntary standards and frameworks, which helped, but had no legal teeth. Overall, resilience maturity varied widely, and regulators worried about systemic blind spots. That fragmentation had real costs. First, regulatory arbitrage. Firms and providers could exploit lighter regimes, leaving weak spots in the overall system. Second, operational burden. Cross-border groups had to satisfy multiple, overlapping audits and guidelines. And third, legal uncertainty. Gray areas around cloud and outsourcing made it hard to design confident, long-term architectures. DORA is designed to close these gaps. One of the main drivers for DORA is the sheer intensity of today's cyber threat landscape. Financial services are prime targets for ransomware, DDoS, and highly coordinated campaigns. Attackers increasingly go after supply chains, compromising software vendors or cloud providers to reach many institutions at once. When those attacks disrupt payments, trading, or core banking, they don't just hurt one firm. They can threaten overall financial stability. Another concern is a silent systemic risk: dependence on a small number of cloud and platform providers. Many financial institutions run critical services on the same few IaaS, PaaS, and SaaS platforms. If one of those suffers a serious outage or cyber incident, the impact can cascade across the whole sector. At the same time, supervisors have limited direct visibility into these providers, which amplifies the risk. For years, regulation focused on capital. If something went wrong, you used money to absorb the loss. That works for credit risk, but it fails for a digital blackout. No amount of capital can restart a payment system that's down, or recover data that was never backed up. DORA marks a pivot from "can you afford the outage?" to "can you prevent it, limit it, and recover fast?" The emphasis moves from balance sheet buffers to concrete capabilities in technology, processes, people, and tested resilience. DORA changes the game by acting as a single, directly applicable rulebook for digital operational resilience across the EU. There's no need to wait for each country to translate it into local law. Instead of fragmented guidelines, there is one harmonized framework that applies consistently to all in-scope financial entities. And because DORA is a lex specialis, its specialized ICT risk rules take precedence whenever they conflict with more general regulations. The regulation casts a deliberately wide net. It doesn't just cover traditional banks and insurers. It also applies to investment firms, payment providers, and a growing range of crypto and fintech players. Crucially, it reaches into the technology ecosystem by bringing critical ICT third-party providers into scope. Cloud platforms, major software and infrastructure providers, data centers, and key payment processors. The message is clear. If your technology can disrupt core financial services, regulators expect you to meet higher resilience standards. At the same time, proportionality applies, so requirements scale with your size, complexity, and systemic impact. You can think of the regulatory stack in layers. Prudential regimes like CRR and Solvency II set capital, solvency, and high-level governance expectations. They answer questions such as, how much risk can the institution carry, and how is the board accountable for that risk? DORA sits underneath as the technical layer. It turns those expectations into concrete ICT standards, detailed reporting, and rigorous testing requirements. You don't replace CRR or Solvency II with DORA. You use DORA to provide the technical depth that makes your prudential and governance framework work in the digital world. DORA also brings a clear shift in governance. It and digital risk are no longer just technical topics. They are core board responsibilities. Senior management must understand, approve, and oversee the ICT risk strategy, rather than simply delegating it to IT or security teams. And even if key services are outsourced to cloud or other providers, accountability does not move with them. The financial entity's management body remains fully responsible for resilience and compliance. From here, it helps to think in terms of an operational agenda. First, get your ICT and risk frameworks clearly documented and owned. Next, manage third-party risk as rigorously as in-house systems. Keep resilience live through active testing, not just policies on paper. And finally, coordinate everything with NIS2 and GDPR obligations, so your overall regulatory posture stays coherent. DORA is built as a single structure with one purpose: operational resilience. Each of the 5 pillars reinforces that goal. Risk management sets the foundation, understanding your ICT assets, risks, and controls. Incident reporting adds feedback. When something breaks, you learn fast and share the signal. Testing checks whether your controls and recovery plans actually work under stress. Third-party risk covers your dependencies, especially cloud and other critical ICT providers. And information sharing connects you to the wider ecosystem, so everyone benefits from collective intelligence. In practice, a weakness in any one pillar undermines the whole structure. DORA is not just another compliance project. It's how you turn resilience into a real business asset. When systems stay up and incidents are contained, trust grows. And trust drives revenue, valuation, and regulatory confidence. By investing in resilience, you're protecting the wider financial ecosystem and creating an advantage. In a crisis, the organizations that can keep operating are the ones that win. To sum up, DORA replaces a patchwork of guidelines with a single harmonized rulebook for digital operational resilience across the EU financial sector. The focus isn't only on how much capital you hold, but on the concrete capabilities you have to withstand disruption. From now on, every in-scope financial entity is expected to demonstrate that it can stay secure, available, and reliable, even under serious digital stress.